Here's a 15-minute chart of copper. Sorry, I recorded this entire video with my microphone on mute, so I hope I don't sound annoyed doing it again. But the last video that I posted, we were looking at this 15-minute, this little arrow called a P1, and I had said we were on this bar, and I'd said that you can buy the close of this bar with the stop below it. And I wanted to go into the nuance of why we could do that. I think I might have hurried a little bit on the video because as I saw it forming, I wanted to finish so I could actually trade it. This here, is your final up bar of that move. And then we have a down bar, an outside bar, down bar, down bar, down bar. And for those of you that are new, a down bar is just defined as a lower high and a lower low. And outside and inside bars take the label of the previous bar. So here's the first up bar, up bar, up bar, up bar. This has the same high, so it's an outside bar, up bar. Here's a down bar. Now this is the very tricky nuance that makes all the difference in the world. This has a slightly higher high by one tick and a higher low by one tick also. So this is technically an up bar. And, again, think of this as how would a computer algorithm do this? It's not sitting around saying, oh, it's only barely higher. Higher is higher, lower is lower. It's a very strict definition. Here it's an outside bar, so it takes the label of the previous bar. So basically, so our first assumption is from a P1, you get two legs up. After the two legs up are done, you can consider, you can stop out, start trailing and stop out. So here's the first leg, here's the second leg, and at the time of filming over here, when we filmed the last video about copper, this was the third leg. And basically, if we had taken out the low of this bar on this bar, then our two waves were complete. This would now be a down wave. You had A, B, C, and then if that C didn't even reach A, that's a pretty weak sign. It's not what I would expect. Coming off a P1, you typically get two equal size legs. And also copper's just been a very strong market today. So, and either way, whether we're right or wrong, we always want to put ourselves in good risk-reward situations. So buying this on the close at 57.60 with the stop one tick below at 57.15 is a 45 ticks, whatever you want to call it. These are dollars per pound, so it's basically 0.45 of a cent is your risk. And just within this one bar, we went all the way up to 460.20. So 460.20 off of here is 240.260. So you basically made, could have made anywhere up to 2.6 cents. Yeah, this is interesting. 2.6 cents off of a 40.45 cent risk, over 5 times your risk in one bar, just like that. And as you can see, we have a hoagie forming right now. So we're not counting the nuances of these bars, but the uptrend is still intact. And I guess at this point, that same stop holds because all of this is a hoagie. Once we break above the hoagie, we'll have a tighter trailing stop. But to make, 4 times, this is 5.5 times, but to be able to book 4 times my profit in one bar, I'm done with this. So I just wanted to go over this detailed nuance. This is a funky bar because it only meets the criteria by one tick, and then this being an outside bar, and I'm calling it an up bar, that sounds strange. So I wanted to go through the thought process and the nuance as to why this is an up bar and why that gave us confidence that, had this broken lower, it was over, but we always give the benefit of doubt to the prevailing trend, and we were already in the second upswing on this 15-minute trend. So if you like any of this, please drop a like, subscribe, ask me questions. I'm happy to talk about this, one of my favorite topics in the world.